Hi there, here's a trading idea for the week. Something I've been looking at, and first, before you look at this, I'm going to be doing some longer term charts, so if you're not already viewing this in HD, make sure to view it in HD and perhaps even full screen. So, something I've been looking at recently are large consolidation patterns. So like, large consolidation pattern right here, and then you have a breakout, and like these large, like William O'Neill, the guy who he's the editor-in-chief of Investors Business Daily, the newspaper. So he always talked about these large cup and handle formations. And a cup and handle, it's basically when, if I could just take a look at this, you see kind of like a base. So we'll say, and it's defined very loosely, a cup, and then you have breakout, which goes up and then normally throws back, and that's where you get a handle, and then you have a breakout above that level, and your buy signal would be right here at this red square. And very often you see like breakouts like you had in Hershey, and you know Hershey's a pretty big company, so if you can have a breakout like this, what other breakouts could you have? So I started a pretty much model portfolio this previous Monday, and while the market was marginally up, this one's actually been doing really well. So let's just take a look at a couple of these. So the ones that, we'll just do these three right here: ISLE, MOH, and OIS. When these things break out, they tend to move pretty quickly. So like MOH, I basically said, all right, so we have a cup, we have kind of a breakout or a test, we have a breakout here, and a slight pullback, and then it breaks to a new high, and then boom, look at this, it goes from 34 all the way up to 37 on essentially looks like we have no earnings, maybe an analyst upgrade or downgrade. Frankly, as a technician, I don't care, but these patterns seem to work pretty well. And then the second one is ISLE, where if we go back in time here, you can see that this stock pretty much, it got hit really hard in 2011. You see boom, 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 and then it just lied dormant for a while. It just chopped around, and then we had our breakout to new 52-week highs right here. And then you buy in. I think my portfolio only bought in at like $7.85, but I'm already almost at a 10% gain. So there's another one. And then finally OIS, which this one's done exceptionally well, where you see the stock has trended pretty much sideways in the upper, in like the 80 to, let's see, we have 80 was the high and the low was around $50. And then you had one breakout, you got to new 52-week highs at just about $88, and boom. And I'm doing this all programmed, so these are just little things that I look for, and the way that you can do this is just look for like just look around for stocks that have done nothing for a while and then make an initial breakout. But the one that I'm looking at now is Dow Chemical, and the stock, it's in like the chemical sector or chemical group, and it really hasn't done that well, to be honest, like the entire group as a whole. So for the past 52 weeks, and almost you might even say past 2 years, like past 52 weeks, it's been in pretty much a range between 27 and 35. So not a wide range at all, while the market itself has gone up considerably. So now, just this week, we had our first breakout to 52-week highs right here. So that might mean, like, we could say that maybe this is the cup and this is the handle and this is the breakout, or it might just be that this whole thing is the cup and we're going to have a breakout and we're going to have another pullback. But anyway, when these stocks eventually do break out, they move pretty darn quickly. And considering that, if we go back here, Dow was all the way up at about $40, seeing it go up there wouldn't be too far-fetched. And if we go even further back, we see that it got as high as about, that looks like $40 still. So that's around its 52-week high, which could be our target. So the way that I would treat this is, since we just had this breakout, it's going to be, it might not be a long-term trade. Once it gets to its target, you might be able to just say get out. But it might be a while until that happens. So the implied volatility, is low, meaning that the options are relatively cheap right now. So I would suggest going pretty far out. So either to about December 2013 or January 2014, and just buy a 35 call. Or if you don't want that, go ahead and invest in the stock and then place your stop loss, I'd say right at this trend line, which would be around, it looks like that's going to be a pretty wide stop. So let's actually place that trend line just about here. So your stop would be around 33.75, right, or maybe even lower, just in this, right where this gap starts. Alright, so that's your trade for the week. Symbol is DOW, no, not the Dow Jones, Dow Chemical. And best of luck, happy trading.